Hello guys, welcome to this video. I want to share something that has been pressing me for quite a while, and I think it is worth sharing, and you people will tell me what you think. And this is it. What if I told you there is a very simple yet stupid way of trading anything in the forex markets without losing a lot of money? And it is not a complicated system. It does not carry heavy terms. It is just based on candle formations within a specific time frame. And I think this is the best way to start learning how to trade forex without losing a lot of money. You can even use live funds. I'm not saying that you'll not lose, but I'm saying if you implemented this simple yet stupid strategy with a good risk management system, you will still be able to come out with something. Now, here's the thing. It does not need a lot of knowledge. It does not need a lot of information. You only need to know what price is doing within a certain time frame. And I think, let me just say this. I think this is the building block of price action. Now, I know you guys are watching many other videos like CRT, ICT, week off, you are using indicators and all that. What if I told you all of that is not needed in this simple yet stupid, very stupid and very simple strategy? Now, let me go to my drawing tool. I want to do this. See if I can. Yes. So now, in a specific time frame, price does four things. What it does is open. How thick can this pen be? I want to know the size of this. Let me see. This is better. Open. So price does four things. Open, forms a high, forms a low, and then closes. This is when we are having a bearish candle. Now, when we are having a bullish candle, what happens? Price will open, form a low, form a high, and then close. And that becomes a bullish candle. Now, what if I told you this is all you needed to start trading a live account? I know some advanced traders will attack me and say, you are silly, you are stupid, you are what? But yes, I agree, because these are very silly, these are very stupid, a very stupid, simple, silly model or system that is bound to make people money. Now, if price is doing this, always price is doing this, almost 90% of the time. Almost 90% of the time. That is why if you open your charts in whichever time frame you have, whether it is the monthly time frame or the 1 minute time frame, all of the candles, most of the candles, almost 90% of the candles, they have a body and a wick. And the wicks are on the both sides of the body. In very few cases do you have a body only without wicks on either side. Very few cases. Now, with this information, I don't think you will need anything else. In fact, you do not need multi time frame analysis. You do not need to know about the bias of the week, the bias of the month, or the bias of the day. You do not need to know about fair value gaps or order blocks or supply demand. All you need to see is observe what the candle is doing. Let us now go to the charts and see what is happening there. Now look at this. This is the 4-hour time frame. A candle, let me use this candle for example. A candle in the 4-hour time frame will open here, this bullish candle. It opened here, went low, and then went and formed a high, and then closed. Okay, we have not switched the time frame. We have not done anything else. We have not switched. We are not looking for advanced things like supply demand, order blocks, breaker blocks, fair value gaps. We are only observing the candle formation. Now let us go to another example. This candle here, it is a bearish candle. What happened? It opened, formed a high, and then came down, formed a low, and closed. Okay, let us look at this tiny candle here. This candle opened here, formed a high. No, sorry, it opened right here, formed a low, and then formed a high, and then it closed. Now you will see all these candles have wicks. Very few candles have no wicks. Like this one is a very tiny wick, but it is there. A wick, it is there. A wick, it is there. A wick, it is there. All these candles have bodies and wicks. Again, what if I told you that is all you needed for you to start trading? For you to start trading a live account with proper risk management, you will still make a lot of money. Okay, so how do these candles form? This is without switching the time frame. If you switched the time frame, you will notice how small is this thing. You will notice for a bearish situation, for example, no, for bullish situation like this one here, price opened right here, and then it formed a low. In the lower time frame, let's say in the 5-minute time frame, this is what happened. Price opened and then formed a low, and then went high. Okay, formed a high, and then came down and closed. So that is how it will look like in the lower time frame. What about this bearish situation? In a bearish situation, price will open, form a high, and then start going lower, form a low, and then close. And this becomes a bearish candle. Now, I hope all of us are not complete beginners and you are able to place pending positions on any chart or your trading platform, whether you are using CTrader, MetaTrader 4, MetaTrader 5, whichever platform you are using, you know how to place pending orders. Now, in a situation where we have should I open a new, let me just go to the chart. In a situation where will I be able to draw here? It is quite slow, but it is okay. In a situation where we have, let me switch to the lower time frame. In a situation where we have a bearish candle forming. Now, a bearish candle is forming, okay? It opens and forms a high. At this point, if you know how to place pending orders, what will you do? You will place a sell stop at this point. I don't know if that will work. A sell stop at this point. Why? Because as this price is forming a high, we are expecting it will go lower, form a low, and then close. So once price moves right to the sell stop, it triggers the sell stop. Now as price is going lower, it forms a low and then closes. At this point, you are holding your sell stop order and you can close this sell stop at this point. This is a running trade. You can close this trade at this point. Don't you think you will have made some money on this run? You will have made some money on this run. Now, once your sell stop is activated, what else will you do? You will place a stop loss right at the place where your high is formed, a stop loss there. And maybe you can decide to have a fixed risk to reward system, like a 1 to 3 or a 1 to 2 or a 1 to 1, 1 to 4, 1 to 5. Or if you're watching price, you just watch the price until this candle finishes forming, and then you close the trade manually. Okay, let us check for a bullish situation. A bullish situation, what happens? Trying to select this. Now price will open, okay? Let me use a different color. Price will do what? Will open, right? And then form a low, okay? And because this price is now forming a low, what do? We place a buy stop right here. Buy stop, okay? And because you are expecting price to come higher and give us a bullish candle, it will come and trigger our buy stop and go higher and go higher. And then what will happen? It will form a high and then retrace and close. Now at this point, what do you want to do? You want to close this trade because this candle has now finished forming. Now you can choose to use a fixed risk to reward system, a stop loss and a take profit. Maybe you place your stop loss here. What color can I use? Your stop loss here. And then you get a fixed risk to reward ratio of 1 to 2 or 1 to 3. Or you can also choose to watch price until that candle finishes to form, and once it closes, you close the trade manually. Now, let me delete all of these objects. I have a indicator. So let's come back to the charts. Let me use the 4 hour. If price opened here, okay, and then it moved low. If you placed your buy stops at this point, as price is playing lower, and then it comes back and triggers your buy stop, you will introduce a stop loss right here. Now, as price is going higher, you are watching it until it closes at this point. So this candle has finished forming, so it has closed. Once this candle closes, you close this trade. Let us check the risk to reward ratio of this trade. It closed here. What is this? 8.2 risk to reward ratio. Am I saying you'll always go get this 8.2? No. These tiny candles will not give you that. Why? Because sometimes price is moving up and down. But if you took a sell order here and it moved low and it closed here, wouldn't you have made money? Same case to these other candles. In the few situations where price comes back to your stop loss, how many times is that going to happen? How many times is it going to happen? It can happen, but how many times? Because you can see all these wicks, these are open, form a low, go high. Open, form a tiny low, go high. Open, form a low, go high. For the bearish candles, open, form a high, go low. Open, form a high, go low. So you can take tiny profits on these small candles and target much more profits on these bigger candles. Wouldn't you have made some money? Now this is something you can go think about. This is something you can go check out and tell me, wouldn't it work? You go and try it out yourself and tell me what you think. Very simple, very stupid idea, but I think it works. There's no need to switch time frames. There's no need to look for points of interest in like ICT does, like fair value gaps and breaker blocks, order blocks. There's no need of looking for candle ranges. There's no need for dealing ranges and all those fancy names that are in the industry, in the forex trading industry. All you're doing is watch a candle open, place your pending orders, and see what happens. Watch the next candle, do the same thing. Watch the next candle, do the same thing. You are just watching price. Now you do not have to do this all the time. Assuming you are a busy person, you can watch the candle open, place a pending orders, maybe it's a buy stop, a stop loss somewhere, and a take profit somewhere, and then you go about your activities. As simple as that. Anyway, I think I'll end this video here and tell you to go and check it out. Backtest it, forward test, do whatever, but check it out. You can give me feedback in the comment section.